Cast is now starting. All attendees are in listen-only mode.
Okay, we're going to go ahead and get started tonight. If someone in chat can just let me know that my audio is coming through, that would be great. Okay, great. So the purpose of tonight's webinar, so I guess to start with, I'm Michelle, offshore hunter with Trade on the Fly. And the purpose of tonight's webinar, I added this in just as an extra kind of for new traders and new members to just kind of do a question and answer format, pretty informal, and just to spend the time with you guys that you might need to get any questions or lingering thoughts in your mind answered, to try and help you guys get up to speed as quickly as possible. And I have several questions that have been emailed in to me tonight, and I think what I'm going to do is go through those first, and then what we'll do is then I'll take questions that you guys put in chat. And it helps me if when we do those in chat, if we kind of go one at a time. If I get a bunch of them in there, a lot of times I end up missing something. So let's kind of try and put one in and let me answer it, and then we can keep going as long as we need to. But we've got a pretty small crew tonight. I'm happy to stay here with you guys as long as we need to answer questions. We might be here for 20 minutes. We might be here for 2 hours. So anyhow, any questions you know, that you guys have that I don't answer in these first few slides, you know, there's no dumb questions, I guess. I'm happy to answer or try and answer whatever you guys have on your mind tonight. So anyhow, with that, I will go ahead and get started. Can you guys see these questions okay that are coming through? I think I made them large enough. Hopefully you guys can see them on your screen. The first question, how do I guard against making impulsive or revenge trades, especially following a loss? I spent a lot of my early trading career doing that, being mad, you know, trying to get even with stocks when I took losses on them. And that's really destructive, you know, to your emotional capital and as well as to your account. And I think that, I guess the thing that I've learned through my trading career is to not take losses personally, and to try and view, because you're going to have losses in trading, and that's just part of the game. The idea or the goal is to keep those losses very small and then to let your winners run. You're not always going to be right in the setups, or sometimes the setups are going to fail. So I have tried to change my mindset through the years of understanding that taking a loss is part of my trading, you know, plan, and that I have a risk management process in place. And sometimes the trades just don't work, and that's, you know, part of the way that it goes. But I did used to feel very much like, you know, I wanted to get even. I'll tell you a story. Emulex. It used to be, I don't even know what the symbol is anymore because I won't even look at the stock. But it used to be traded on the NASDAQ, and I think now it must be on the NYSE or the American Exchange. I think it's ELX. I spent a year fighting with that stock because all I ever did was take losses in it, and I swore that I was going to get even with it. And all that, I mean, I think that, I don't even remember how much money that stock cost me, but it was a horrible learning lesson for myself in thinking that I was going to conquer, you know, being right in this stock. And I guess through my career, you know, and always trying to learn and get better, I have just learned to really let go of the revenge trade. Things don't always work out, and I just move on, or I reassess. You know, sometimes you'll get a move that will take you out of the position, and then the position will go in your favor. And at this point where I'm at, if that happens 2 or 3 times and the setup is still, you know, continues to work back into being valid or being the way that I thought it would be, I'm okay with continuing to try multiple times, you know, if the stock is going to break out or break down, you know, and maybe I had my stops too tight, you know, it depends on what the setup was. But I've just let go, I guess, of that feeling at this point in my career. I would encourage you guys to let go of the revenge trades. I will also say on the impulsive stuff, that also is something that is very alluring because there's a lot of stuff every single day that moves very quickly, that makes very large moves that you see on Twitter, in other rooms. Everybody's chasing it. Everybody's making a lot of money, and it tends to let, or make you feel like you're missing out. And again, there, I think experience and time in the seat, for me, I've gotten to be where I care less about that. I don't feel most of the time like I'm missing out on something, because every single day the market is going to give us new setups. And what I've tried to work really hard on focusing on is the stuff that works for me and the stuff that fits my trade criteria, because what I've found in the past is that when I chase stuff impulsively, I'm usually sorry that I did that. Because I don't feel like I have a good entry. I often may end up taking a loss on it because I get stopped out, because I was in a hurry instead of waiting for the setup. And UCO is a great example of that. I had that on the ledger Sunday, and I had a couple of setups either off of a pullback or on the move over 8, and that gapped up Monday morning. And I said on Twitter, that I was going to reassess because it was gapping. I never ended up making an entry in that because I just never found an entry that I felt great about. Well, it moved almost all the way up to $10, and that sucks to have missed that. But for me, I don't care. I just move on to something else and understand that I never found an entry there that I was comfortable with, and maybe somebody else did, and that's fine. But I've just gotten to the point where there's always going to be new opportunities every day. I'm going to miss stuff every single day. But the more patient that I am in waiting for the setups that fit my criteria, most of the time the happier my profit and loss statement is going to be. And that just means that I, sit on hands and I miss things. And that doesn't mean that I don't still occasionally chase things, because sometimes I do that, but I do less and less of that. And I think that if you can let go of a lot of that and focus on what works for you and not feel that fear of missing out, because every day there's going to be new setups. And if you're patient, the stuff you're watching is going to set up and move. It just may not be today. And that's the part that's frustrating, is to sit waiting for the setups that you are specific about what your criteria is. You're looking for a certain break, over a certain price level, or a breakdown, and they don't always happen in the time frame we want it to. And you're watching, other stocks go up $3 or 100% in a day, in some sort of a momentum chase. And so if you're that style of trader where you can chase that momentum and you understand that, that's fine. I think for me, that's just not a style that most of the time fits me and fits my personality. I'm a much slower style of trader, and I've just learned through the years that I really need to focus on the things that I'm good at, because I'm not going to be able to trade every style well all the time. There are times when I can get in on something that's a momentum. I can find an entry that makes sense, and I could participate in part of it, but for the most part, I just try and focus on my stuff. So anyway, next question. What time frame do I use to monitor trades once I'm in them? It's going to depend on whether it's a swing trade or if it's an intraday trade. My swing trades, I'm going to monitor the daily chart and the 60-minute chart most heavily. And then on my intraday trades, I'm going to look at the 60-minute chart, the 15-minute chart, and then sometimes the 5-minute chart. Obviously, if it's something where occasionally I look at a very small time frame, then I'll look at those smaller time frames. But I always try and use multiple time frames to help me manage the trades and try and help me give a bigger picture to what's going on, looking for areas of resistance above or support below that makes sense. Next question, do I set stop loss orders overnight? I always set my stop loss orders. I don't ever set them for after hours, though, or after hours trading, because a lot of times there can be odd moves during the after hours, and I'm not interested in participating in that. So does that mean that, excuse me, if news comes out overnight that's not expected, that, there's some sort of gap down that maybe would have been triggered after hours and I would have been filled, possibly, but there's too much funky stuff that goes on after hours that I'm just not interested in participating in. So I always have the stop loss set, but I have it set for market hours only. just personal choice there. When entering a trade, do I create an order, cancel order with my stops and limits preset? What is my strategy for establishing those? Because I'm here every day, I prefer to handle all of my entries manually. And what this person is talking about here, and I can only speak to the platform that I use, which is Ameritrade and Thinkorswim. You'll have to check on your own platform. But there's ways to, let me pull this up here for you. There's ways for the people that are only part-time traders and maybe can't be in front of the screen all the time to enter more conditional orders. And all of the brokers out there should have some sort of help, or support functionality where you can pull up or call them to ask how to enter these orders if you need to. But what this person is talking about is, if you enter an order for something that your limit price or the trigger price is 25. Once that's triggered, that it creates conditional orders that either sell that at a price above your order or below, and that once one of those two is hit, the other one is canceled. So those conditional orders are out there within most platforms, and certainly I think that if you're not in front of the computer all the time and you're trying to do some swing trading, with the setup types that we have in the scans where we're looking for specific price breaks, the conditional orders are certainly a way to go. I don't use them just because I'm here every day. So that help function within your platform is great for understanding this. All of them, I know Ameritrade or Ameritrade as I always call it, they actually have a really good help search function in there that you can learn a lot of information if you're a newer trader and not understanding order types, if you're not understanding short selling, if you're not understanding, any of the functionality within your platform. If you take some time to read through that, you can oftentimes find the answers that you're looking for there. So anyway, okay, next question. I'm generally curious about your process of screening stocks. How do I set up my charts for reviewing indicators? So first of all, on screening stocks, I've talked about this before, but I'll just touch briefly on it. I've talked about it in previous webinars, and I'm always amazed that this is one of the top questions that I get is everybody wants to know how I screen. And my screening process for stocks, or my scanning process, is very labor intensive. I store everything in stockcharts.com. I have hundreds, probably over 1,000 stocks. I've never counted, stored in there by sector, by group, by watch lists. I have all sorts of different ways of setting those up. And I scan through those watch lists, ABC, every day. I'm always adding and deleting and filtering stuff. Plus, I have usually 40 to 60 charts up intraday on my platform that I'm watching. So for me, my scanning process is just a manual, labor-intensive process of me looking through these charts and sorting through what looks like it's ready to go. And I have the ability in stock charts to pull up, when the oil's moving, or if natural gas is moving, or if, cybersecurity is moving. I have stuff stored in there by sectors, so I can pull up the sector if the sector starts to move and quickly review, 10 or 20 charts in that sector to pull what I think is most interesting forward. I also do use spinviz.com. They've got a lot of screening and scanning tools in there. The way that I primarily use that is just to look at percentage gainers or losers on the day to see if there's something that's moving off of news that I'm interested in pulling into my platform or into my stock charts account moving forward to watch it for another setup. So I don't have a scan that I can give you. There's a lot of great scanning tools out there. It's just never been the way that I've gone about doing it. So my charts for reviewing, I always start with a daily chart. My daily charts are pretty simple. I have my MACD and I have the RSI on there, and I have the 50-period exponential moving average and the 200-day simple moving average. So I'm looking for any sort of chart pattern or pull back to, the 50-day or the 200-day moving averages, overbought, oversold conditions. I'm looking for multiple different criteria that may be setting up for something to move over into my scans. and then I always, from the daily chart, then I usually move down to a 60-minute chart to take a look at it there. So I always start with the dailies, and then on the stuff that I'm most interested in, then I'll take a closer look at the 60-minute chart to try and fine-tune an entry that makes sense. Next question. I use the 50, not period, it's the 50-day exponential moving average on the daily charts. And that's just personal choice. You can either use the simple moving average or the exponential. The difference between the two is in the calculation, and the exponential is going to give more weighting in the calculation to the more recent prices, so that the exponential moving average will react more quickly than the simple moving average will. So just personal choice. I choose exponential moving average on the 50, but I use the simple moving average on the 200. And then so on the hourly chart, again, yep, I use the 60-minute chart with the 50-period exponential moving average on that. Next question I've heard. Let's see. Okay. I've heard numerous times that price and volume are key. I feel confident about the price patterns, but I lack a solid understanding of how volume should act and how to analyze it. Do I have any tips about that in certain patterns such as an ascending triangle or trading range? And do I know of any resource that will help you along the way? Well, I will say that my DVD, self-promotion, I guess, which I hate doing, I have a DVD that is going to be called The Basics of Swing Trading Using Technical Analysis that is almost complete. It's going to be released February 15th, and I go into this in detail with technical analysis, understanding indicators, recognizing chart patterns both on the long and the short side, and then talking about the volume and how the volume should act within these certain price patterns. Of course, there's lots of books out there and tools online that can help you, but volume is very important, especially during the pattern development. And usually inside of most patterns, for example, a bull flag, an ascending triangle, wedges, during the formation and the consolidation period within those patterns, for example, in the bull flag, when that flag is forming, you want to see volume declining. The ascending triangle, same thing. You want to see as that price works its way up into the point that it's going to break out of that pattern, normally the volume consolidates, not always. And then what we want to see on the successful breakout of most chart patterns is to see volume confirm on the breakout. We don't always get that. When we don't get the volume confirming on the breakout or the breakdown of a chart pattern, I'm always a little suspicious because sometimes it can be a false break. But ideally, we get volume confirming on the breaks. We have normally volume contracting during the formation of whatever the pattern is, ideally. That doesn't mean it happens that way all the time. So again, we need to use our technical indicators and our chart patterns as guides, understanding that they're guides and that ideally or ultimately the price is, the most important thing, and that the patterns and the indicators are guides to help support the price action that we're seeing. Okay. Let's see. I want to make sure, I need to flip to the next page, but I want to make sure that I talk about chat guidelines and then trade on the fly stuff too. I had some questions that came in last minute, so I'm going to flip to the next page and run through those really quick. All right, am I usually looking for technical setups or momentum? I am primarily almost 98% a technical trader. So I'm looking for chart patterns. I'm looking for support and resistance. I'm trading off of overbought and oversold. I do occasionally trade momentum, but rarely, not very often. Sometimes the momentum will come from a chart pattern, though, so if that's the case, if it's some sort of a breakout, for example, a bull flag, I'm all over it. If it's just momentum on the news during the day, that's not usually my cup of tea. So I try and stick to my knitting. That doesn't mean that I don't participate sometimes when I can make sense of it, but I just have gotten more and more where I try and focus on what makes sense for me. and try and be less lured away by other things going on, because usually when I'm sorry that that's happened, because I don't always get entries that I'm comfortable with. So do I always check sector strength early in the morning and revise the ledger accordingly? No. I've gotten questions about sector strength and sector rotation because I talk about that. FinViz is great for that. They have the ability in there for you guys to look at industry groups and then, sector groups, and it will show you by the week, by the month, by the day, by the year, sector rotation, where money's moving for the day, and that's a great tool. And I do use that some. Part of I guess, as you trade longer and you have more experience, you're just going to know. You're going to see stuff moving and understand that the financials are moving today or the biotechs are weak based on the stuff that you're watching on my screen. So I have a big mix because I have a lot on my platform, certainly not perfectly, but I have a big mix of a little bit of everything a lot of times that I'm watching. So I'll get a feel for, oh, it looks like, the biotechs are weak today, or it looks like financials are perking, or whatever the group may be. So some of that comes from feel and just sort of time in the seat and understanding what is moving, that probably means that sector and that group is moving some. But FinViz, is a great way to look at those, or to look at them at the end of the day to see what sector today had money moving into it, because that may be something or maybe a theme that's going to carry forward into the next several days. But no, I'm not adjusting the ledger necessarily accordingly. I'm adjusting the ledger and adding things to it as I find setups either during the day or then when I do my scans 3 times a week based on setups that fit the criteria that I'm looking for, that have specific chart patterns or have, retraced or getting ready to break out or break down. Is 2-3, for example, the anticipated number of days you are looking to be in the trade? No. So on my scans, when I say 2/3, that's actually today's date, February 3rd. So I just always try and have that in there if people, are wanting to look back at the scans, they know what day the scan was actually posted. So in the scan titles, the 2-3 or 6-7 is the date of the scan that I've done. Will I be doing a specific webinar on shorting? I hadn't thought about that, but after this question came in, I think I'll actually include that on Thursday's webinar. So I will talk more about that because I know we have some new traders. So I will include some of that information for Thursday's webinar. So before I take questions in chat, I wanted to go over really quick just a couple of things, or just at least some thoughts on chat, because I know I've had some emails that have come in from folks who have either never, they're either new traders or they have not participated in a chat room before, and, just kind of having trouble getting up to speed or feeling lost, which is normal. And I did send over to Nate some new chat acronyms and guidelines that I'm hoping he will get uploaded today or tomorrow. I'll let you guys know as soon as he gets those uploaded. So when you log on in the morning, it says, welcome to Trade on the Fly Swing Chat Room, and then there's that little link in there. When I say that he's updated it, then it will, when you click on that, it will give you the acronyms that we're using, and also just some kind of general guidelines and thoughts on the room to help you guys out there. But it's normal if you have never been in a chat room before to feel lost. And what I suggest to folks is to spend a week, or even 2 sometimes, just watching and observing, which I know is not the answer that you want, because as new traders you want to come in and you want to start trading today because you're excited. But there is, I don't believe that there's probably, I've been involved in several different chat rooms, and I don't think any of them you're going to feel like you're up to speed right away in any of them without having some trading experience behind you to understand what they're talking about. I think in the swing trade room we try and do a pretty good job, at least from what I've seen, in explaining what we're doing in the setups. And that's the idea that behind the room is that we have setups with a fairly clear set of criteria. I prefer a chart to be included. If you use Thinkorswim, I can help you If you want to link charts, a lot of people use Lightshot to link their charts. So charts are great if you want to post charts. If you can't post charts or don't want to, at least you need to tell us your timeline that you're looking at, you know, a 60-minute chart or a 15-minute chart or a daily chart, and just kind of your idea, so that everybody in the room, including the new traders, has the ability to pull that chart up and take a look at what you're seeing or what I'm seeing, and hopefully start getting a feel for the setups that we're looking for, whether it's you know, a bounce off of the lows, we're looking for a move through resistance, it's a particular chart pattern like a flag or an ascending triangle. In the room also, you know, as we continue to grow, my hope is that we continue to have some general market discussion, you know, during the slower times, because I think that that can be really constructive for a couple of different reasons. Number one, it allows the exchange of, you know, really good ideas between the traders that are in there. We have traders in there that are all different levels of experience, from brand new traders up to some very experienced people we can all learn from. We don't always agree, and I personally appreciate some productive you know, discussion and opposing views, because it helps me stay on my toes to make sure that I'm not too biased maybe in the view that I might have at the moment. So we will continue to have some general market-related discussion in there as time allows. So, you know, it's a slower style of room. We're not always going to have alerts going off every 5 minutes, and so it's nice to have some learning and some education in there as well. So if somebody is coming from maybe a momentum style room and seeing us talking about general market-related things, that's the way it is, and that's the way it's going to be in that room. So and the acronyms, you know, we are, I'll have Nate upload those. If you don't understand them, you know, hit me up during the day through a private message and I can help you out with those. But anyway, so be patient if you're a newer trader. Give yourself a week or so, and then if you've got questions, feel free to send me a message, and I'm always happy to help out, but it just takes a little bit of time and some time observing the room to start getting a feel for it, and most people find after a couple of weeks that they feel like they're up to speed and understanding what we've got going on in there. So, and then the last thing that I wanted to go over with you guys before I take questions is also just the Trade on the Fly site. So I'm going to bring that up real quick, and then we'll take questions. So the reason that I wanted to go over this, some people are very good at spending time, you know, looking at the information provided, and some people are not as diligent about that. On the back end of Trade on the Fly, under your dashboard link, I have put tools in here, and I'm going to continue to add to this moving forward once the programmers are finished working on all the back end stuff. But on here, you know, I'm going to be able, we've got a little calendar so you guys can see when I have webinars scheduled. I also will say that I've got Tim, who is out of Mall City, in the chat room, and one of the moderators talked into doing some webinars for us as well. So I think he's going to be doing a few webinars a month. So I will have his webinars with the dates and times on here for you guys. So the calendar function is great. You're going to have your scans. You guys, we have the chat logs in here for people that maybe cannot be in chat all day. There's a lot of good information in chat. So as you have time to review those, they don't take very long to review. Certainly check those out as well. The webinars link, they don't have all of my webinars from Investors Underground imported over, but we'll get all of those and hopefully get them categorized a little better, but there's a lot of them there already. The resources link is the big thing, though, that I think that I wish more people would take a look at. What I've tried to do under the resources link is give, you know, a few frequently asked questions, which I can add to if you guys have suggestions, but also some glossary and some terminology, which I'll continue to add to. But the big thing here is I've tried to include what I felt like were, you know, I've done almost 2 years of webinars for Nate at Investors Underground. I tried to pull forward what I thought would be the most useful webinars for people either that are new traders or who are trying to get up to speed in understanding my trade style and what we're doing in the swing trade room. So these important webinars If you guys have time, and have time, I know everybody's busy, but take time to watch these as you can, especially the new traders. This is going to help you guys get up to speed, and watching a couple of these is going to get you up to speed in the chat room much more quickly as well. So don't be afraid to, and if you guys have suggestions, I'm not going to be able to add everything in on the back end here, but I'm going to keep adding to it, and some of that content will be driven by the suggestions that I get from you guys. So if you have suggestions, certainly feel free to forward those over to me in email, and I'll either add them in or I'll say that it's not something we can do right now. So anyway, those were the questions and just kind of some of the things I wanted to touch on. I am happy to answer any questions that you guys have now. You can throw them in the chat room and we can go through those as well. And if you're really shy, you can send me a private message and nobody will see. I'll stick it on the other screen so nobody can see what you're asking. And I see typing, so I know questions are coming. Based on my experience, once stops are set, are you better off letting a trade stop out or cutting it off early if it appears? I try really hard to set my stops at the risk level I'm comfortable with and trying to let it work. It seems like, recently, the whole month of January, we're in the box. We are having a ton of volatility, and it's making it really tough on the swing trades. And what I will say is that staring at your swing trade all day long intraday when it has pullbacks is going to drive you nuts. And in my experience, a lot of times if I've cut it off early and then the trade goes in the direction, it just leads to more frustration. So set your stops according to your risk parameters. Often, with my stops that I set, I'm looking most often for something that's within my risk tolerance that also is at a support or resistance level that makes sense that it should stay below. So that's the way that I try and formulate my stops, is in an area within the risk tolerance that the stock should either support at or should not go above if I'm short. So I try and let them stop, through the stops that I have set. The one caveat there would be I tightened stops up when the market was testing heavy on support last week because I wasn't comfortable and I knew if we broke support, what would probably happen there. So there are times in the market if I am feeling very uncomfortable with things and uncertain that I will tighten the stops up and reassess. So in general, I will set my stops and just let them work. And, if you get stopped out, it sucks. It's just part of the game and we got to move forward. So how to send a private message. If you double click on my name at the top, Offshore Hunter, that will pop me up a little box that you can send me a private message in. So at the top here, Offshore Hunter, if I double click on that, maybe I can't send a message to myself. There we go. So with Offshore, I can't send a message to myself, but anybody you double click on, you'll pop up a box and you can send them a private message that can't be seen by anybody else. So during the day, if you guys, have questions that you have tried to answer on your own and you can't find the answer, hit me up, or hit the other moderators up and we'll help you out. One thing I will say there is just to try and remember we're all trading in here and trading for a living. And so for all of us, the moderators and everybody else in here, our trading comes first. We'll answer questions as quickly as we can. If I don't get back to you right away, it either means a couple things. I'm either trading and I'm busy, I'm helping someone else, or I'm not sitting right at my desk. I will get back to you as quickly as I can. So let's see. I have seen often in the room refer to market internals as bullish even though the market is moving down. So the market internals. If we go to the resources tab under the dashboard, there is, I think, well, maybe it's not in there. Oh, yep. Fourth one down, market internals and lots of web member questions. So I talk about market internals. So it's a setting that I have in TOS that takes a look at several different general market conditions. It's taking a look at the tick. It's taking a look at the advancing the volume going into advancing stocks versus declining stocks, the number of stocks advancing versus the number of stocks declining. And in that webinar, I'm not going to do it right now because I've talked about it before in other webinars. It's another guide that I help to gauge what I see going on in the market. And the market internals can start out negative. They can move from negative to positive. They can move above the zero line. They can have divergences. All of these things that I'm watching in the market internals are helping to confirm the market action that I'm seeing. Again, it's just another guide to help me understand what's going on under the hood, basically. You know, if I see the market internals and the market opens way down and the internals open very negative, but they start climbing from that negative level higher towards possibly a red to green move, it's definitely a heads up for me that I shouldn't be shorting at that point. So take a look at that webinar when you get a chance. I can't speak to other platforms on how to set that up. It's in that webinar that I do. If you use Ameritrade and Thinkorswim, it will go through how to set those market internals up. I find them to be very helpful, and again, just a guide and a gauge to help me understand what's going on under the hood, especially if you feel like you have a bias. If I'm feeling, you know, oh, things opened really ugly and I'm feeling really bearish and negative, and I see those market internals start climbing off of very low levels early in the day and then they go red to green, you know, it's confirming the underlying strength that's going on within the market. So check out that webinar when you get a minute. You're welcome. And I guess I'm not sure there. I don't know that I've ever referred to the market internals being bullish even though the market is moving down. The market cannot move against these internals. So if someone else has made that comment, I can't speak to that. But the market internals that I watch are going to always, the market cannot move against those market internals. So are certain price patterns more reliable than others? I would say yes, there are certain chart patterns that I prefer over others, and I think that, you know, and some of that's a matter of personal preference. I think that, you know, the flag patterns often play out very reliably, a bull flag or a bear flag. I think that, you know, triangle patterns, ascending triangles, or descending triangles are, especially the ascending triangles, you know, and again, it depends on the market you're in as well. I mean, if you have a descending triangle in a bullish market, the reliability of that may be somewhat questionable, but if you understand the chart patterns and then you understand the market that you're in and the structure of the overall trend that the stock is in on the daily chart, can be very helpful. So I like flag patterns. I like triangles. The symmetrical triangles are great, but you have to remember with those you don't need to, you should not have a bias, because with symmetricals you need to wait for the break. I find that the head and shoulders patterns, whether it's inverse or topping, are less reliable, or I see less of them, and I don't know if that's because they're less common or because I just don't find them as often. I'm not sure there, and I actually talk about that in the DVD some. You know, I love rounding bottoms. Those are great patterns. They take a really long time usually on the daily charts to play out, but once they do, you know, if they form a cup and handle, can be very nice. So I think the triangles and the flags are the most reliable and some of the more common patterns that I find. You know, and everybody, I mean, if you ask 50 different people, you'll probably get 50 different answers, but those are some of my favorites. Do I have a seminar on how to save the charts that I do with the trend lines, etc.? I don't have one. If you're using stockcharts.com, you have to have a membership there in order to save all of your lines and your annotations on the charts. It's a super cheap membership, and it's well worth the money. I think I'm not even on their best membership. I'm like on the middle of the road package, and I think it costs me a couple $100 a year, you know, $17 or $18 a month or whatever it is. It's well worth the money for the organizational, you know, capacity that it has and the ability to store everything. And again, I had someone else ask me if I would do a webinar on it, and I was going to do a webinar on how I do stuff with stock charts, but then I spent some time looking at stock charts help and support area. They already have all the videos there for you, so I decided against redoing something. I mean, why reinvent the wheel when they've already done it? So if you join stock charts or Ameritrade or anything else out there, if you will look under help or support first, you will probably get the answers to your questions answered by them better than you're going to get them answered by me. I do not use nearly all of the functionality that stock charts offers. So for anybody that's using it or is thinking about using it, check out the videos that they have, because I was going to do a webinar on that, you know, or do you know, a blog post on how I do it. And when I went and looked and saw the videos that they'd already created, there's no sense in me doing that when they have already done it. So check that out there. And if you have, you know, questions, or if you have questions within Thinkorswim, certainly hit me up. I'm happy to answer some general stuff there. But kind of the point, you know, and I'm not saying that I won't help, because I will absolutely help people. But what frustrates me is when I know the answers are there and people don't take the time to try and answer the question themselves. You know, kind of the whole thought process behind, you know, my whole very firm belief is to be successful trading in the long run, you have to learn to be independent and confident in the trading that you take. And that means, you know, being responsible for things on your own and trying to find some of the answers on your own, because a lot of the answers out there will exist for you if you look. If you are waiting forever to be spoon-fed everything, you are not going to make it trading. So, you know, just remember that. I'm always here to help you guys, but please, please try and find a few of the answers on your own first, either through the help or the support button on stock charts or Ameritrade or wherever it may be. A lot of the answers are in there in probably way more detail and more depth than I will ever be able to give you. So check there first, and if you can't find the answer or you're still confused, I'm always happy to help. Sorry to get on my soapbox there, but I'm seeing some patterns develop sometimes with new people and not trying to help themselves. They are looking for everything to be easy. Trading is not easy, and if you want to make it, you're going to have to figure that out. Okay. Do I scale into a trade when it's breaking out and climbing, or do I go in with size and let it work? I have historically been all in or all out. I have started working a lot over the last year and scaling more. So I think that scaling is very good. I personally have not been great at it. I have always been all in or all out of a lot of my trades. I have found a lot of benefit over the last year in working on taking a toe dip or an initial position and then adding to it. You know, and sometimes that initial position may be early, it may be in anticipation of the breakout, and then adding to it on the breakout and then maybe a little bit above it. Doesn't mean that I do it 100% all of the time, but that's something in my personal trading that I have been working on incorporating better, because my habit has always been from the beginning to be all in or all out, and that's always been my style, and I think it's more beneficial to do some scaling in many cases. I have heard the first half hour or so of trading is clearing out all the orders or harder to gauge the direction. Do I feel this is a case or a tail? I do feel it's the case. I watch it. I mean, I've watched it even just in this last week with some of the setups that I've had out there where they will literally hit that price or go 3 cents above and then dump it down below that price. So I tend to sit on my hands and observe a lot more in the first 15 or 30 minutes of the market. Certainly not always, and there's times when stuff moves and I want to enter early, but I would say that that first 30 minutes, I spend more time observing a lot of times than I do entering trades, you know, unless it's something I've really been watching and I've got volume confirming, you know, and it makes sense to go. Sometimes if it will move, you know, if the breakout price is 25 and it goes 25.03, you know, and it's right, you know, 5 minutes after the open, sometimes I wait and I'll say, you know, I want to see if that price is going to stick. And if it does and I have to pay 25.10 or 25.12, I'm okay, because what I don't want it to do is go 25.03 and then dump down to 24.50. So I would agree with that. I don't know about clearing out orders or harder. I just think for me it's harder to gauge what's really going on. And I think if you watch often in the swing room, I mean, sometimes there's alerts that start going off right away in the morning, but a lot of times as the day develops, that's when I'll start putting more stuff in because things have had a chance to settle down, and I feel personally like I start getting a better and truer read on what's really going on and the setups and the things that are moving. So that's just my 2 cents on it. I do have some stuff that's lower volume or lower float, and yes, the strategy does change. I always say to you know, size appropriately if it's a thinner stock, and I try not to put a ton of those out there, but I know I do have some, and especially some of the newer IPOs, and like NEFF is one. Just size down. I mean, or choose not to play. To me, it's never made any difference. And what I will say, and what I have a fondness for those sometimes, is because they can make some really nice moves very quickly, the lower float stuff. And if you go back and look over the last year or so on a lot of the new IPOs, you know, it used to be stuff would come public with, you know, whatever, 30,000 or 30 million shares or 50 million shares or 100 million shares. Well, the trend over the last year is for them to bring these companies public with very low floats. A lot of them have, you know, less than 10 million shares, so the float is really tight. These things can make some tremendous moves. So I like those. I just play lower size in them. And so that's what I would just suggest is either if you don't like that style, then just don't take those if they don't fit your trade criteria. If you do like that or you do want to play some in that arena, just size down, you know. So yeah, so I'm going to have some of those because I like them. I'm trying to have a variety in the setups. I'm trying to have some spec plays. You know, there's going to be some stuff that's going to be lower volume. I understand that's not everybody's cup of tea. I personally like some of that because I know what it can do. I just play lower size in it. Then I have stuff that's very liquid. I have some stuff that's expensive. I have, you know, a lot that's in the $5 to $20 range because I know we have a lot of people with smaller accounts, but I'm trying to offer, you know, a wide variety of setups as best I can because I know that, you know, not everybody is looking for exactly the same thing. So, you know, pick and choose what works for you. Yeah, so size, just be careful with your size. You know, and that's another good thing with the lower volume stuff or the lower float stuff, you know, where scaling might become very important. Maybe you take a partial, maybe you take a quarter position, you know, anticipating the break. Maybe you take another quarter position on the break, and then maybe you add a little bit to it, but just size down there. Any other questions? I see no typing. No, it's not just you. It's everybody. So in Sunday's scans, I put a longer-term chart in there of the S&P. And it's funny because some of the traders that have been around longer, and I have visited a little bit, not right in the chat room, but privately, just talking about a lot of the new traders that have come on board recently that have not experienced this type of market before. And I've been trading for 14 years now, which is not, forever, but it's certainly enough that I have seen a lot of different types of markets. And new traders that have come on board in the last couple of years, all you guys have really seen is a very strong trending market. You have not had to deal with reality, and the reality of it is the last couple of years, because of QE, we have not had a real market, in my opinion. I think we're moving into what a real market really is, which is more volatility, more ranges, more wider swings. And what's hard and what's difficult is the volatility that we're seeing being very violent both directions. We haven't had this. I think that, and I don't know how it's going to resolve. We start testing support and I think, oh, we're going to break to the downside, and then today we're back higher. We will break out of this range that we're in at some point, whether it be higher or lower. I don't really care. I just would like to get a break of range. But what I am guessing that we may end up seeing this year is some really wide ranges in the market. And what's difficult with that is we don't know what those ranges are yet. So it makes it much more difficult to play. As this year develops and we figure out what those ranges may be, or whatever, maybe we don't get a range. Maybe we get a break higher and we're going to infinity, or maybe we break lower and then we figure out things from there. But the market has been very difficult this first month of the year. It's a different market environment that we've had for 2 or 3 years now. So it is difficult. It's overbought and oversold, and it's taking profits much more quickly. It's making it very hard for the swings because you've got to book your profits much more quickly than what I would like. But it's what the market's giving us. So we'll have to just keep trying to adapt and keep trying to be careful and more fine-tuned in our entries and looking at overbought and oversold. If you guys, the DVD that I have coming out, I talk a lot, and I've done webinars on this, on the overbought and oversold conditions, especially on those 60-minute charts and the intraday time frames. That overbought and oversold, using the stochastics or using something like a RSI, your relative strength indicator, when we're in trading ranges, can be phenomenally helpful in helping you understand the price action and helping you find entries that are good risk reward off of oversold levels. So momentum leading indicators in trading ranges will help you immensely. Leading momentum indicators would be things such as stochastics and relative strength indicators. Those certainly aren't the only two. Those are the two that I use the most. So I would encourage you, if you're not considering using some of those, to take a look at those while we're in this trading range. It will help you a lot. When the price goes higher than the cost, how to set the trade strategy to keep the profit. So you're just going to, again, that's going to depend on your trade plan. But as the price moves above the entry, it's always hard right at the entry. As the price moves above the entry, I will typically move my stops up. If the entry was $14 and the stock is trading at $14.30, I personally am not going to move my stop to break even just yet, because I'm probably going to get stopped out, especially in this environment. So on the entries, I'm trying to give stuff enough room that I'm not going to get stopped out on an intraday swing, to try and allow that setup to get a little bit of room to get some more upside momentum. That hasn't always worked out well in this market environment. So you're going to have to do what works for you. But I continue to manage my stops. The trade ledger I continue to look at intraday every day, and I move and adjust stops as it makes sense for me to do so. As the price moves up, and I feel like I need to tighten the stop up, or I've gotten enough room on the top side that I can move the stop up without feeling like I'm going to get some sort of an intraday swing, then I do so. The other option there is to use some sort of a trailing stop that's either based on a dollar amount or a percentage. So I move the stops up as I get room, and then as there's levels of support below that I think that should hold, as the stock may rest or pull back some, I use those areas too. As this is earnings season, the stocks move up quickly or down on the news, changing trend. Curious as to how a swing trader factors this in. So I do not ever hold through earnings. I tried playing that game early in my trading career, and it's just too much of a lottery for me. It seemed like no matter what I thought was going to happen when I would hold something through earnings, it always went the other way. So I think I didn't see where Chipotle Mexican Grill, I saw at one point they were down like 30 or 40 points after hours. I just don't even look or play that stuff anymore. It's just not worth the heartache and the anxiety that it gives me. So I just steer clear of it. It's just not my cup of tea. That doesn't mean that you shouldn't do it. If you're experienced, or it's, the arena you want to play in, or you can scalp part of that in the after hours market or the next day, that's fine. I feel like there are so many setups out there that I would just rather let something like that settle out after the earnings news and then figure out a way to play it if I choose to play it. I just don't personally care for the guessing game that I feel like has to go on with that. So just not part of my cup of tea. There's just too many other setups out there that are not earnings related that I can take without having that crazy volatility and the guessing game that goes on there. So just me. Doesn't mean that it's right or wrong, just that's how I do it. I have bought more of a stock that I paid too much for to try and average, at a lower price. So you're averaging down. Usually making for about, yeah. So here's what I would say. I played that game a lot too. I thought that if the stock was I bought it at 20 and it went to 18, that was even better, and then it went to 15 and I'd want to buy more, and then before I knew it was at 10. Never, ever, ever, ever average down in your losers. If you take a position and it goes against you, you need to have a stop in there, and at some point you're either wrong and then you just reassess. So I don't think that flipping short is necessarily the answer. It depends on the setup. If I'm looking to go long something based on a setup, I shouldn't feel necessarily like I want to flip short right away. I guess there are occasions that happens, and it's usually if something in the market is changing and I choose to scalp it the other direction, or maybe off of an intraday trade, or if it's something like a symmetrical triangle that starts to break out and then it turns around and breaks down. So there are some exceptions to the rule where you flip to the other side of the trade, but don't ever average down in your losers. Set your stops and let those stops work. I know that it is very difficult getting stopped out, and it's not fun. What I will say in this market environment that we need to spend, all of us need to spend more time working on our entries. If we can get entries that are fine-tuned and really make sense, the stops should become less of an issue. Again, sometimes easier said than done in the wild volatility and these wild swings both directions we're getting. So I would encourage strongly to not ever average down. I can tell you from experience it's not going to end well. What I will encourage you to do is to add to your winners. I don't know what it is about new traders, myself included, and you can read any books out there and they will talk about it. There's something in the mentality of new traders where you think that if you buy it at 20 and then it goes to 18, you should buy more, and then at 16 you need to buy more, and all of a sudden you're at 10 wishing you'd have sold everything at 18. There is something, about everything being on sale that we want to buy more, and you need to sort of unlearn what you've learned, or unlearn that behavior. You need to almost do the opposite of what you think. If you're wrong, and you either move on or you accept your loss and reassess. And if the stock, if it was some silly 20-cent move down below your stop that takes you out, and then the stock sets up again and continues to move the direction and hold the breakout you were expecting, then re-enter if you choose to. I used to not do that. I used to be mad at the stock when I took a loss, and a lot of times I'd look back a week or 10 days later and it would have gone the direction that I thought. I just either had my stop set too tight, or it was just one of those things that happened, and because I wasn't willing to reconsider or continue to watch that setup if I thought it was a good setup, when I would look back 10 days later, I'd think, you know, that $20 stock is now trading at 26. Boy, was I an idiot for being mad at it. So, you know, I try and not hold grudges anymore, other than Emulex, which I'll never look at that chart again. So, anyway. Other questions? Is there a way to differentiate between a double bottom type setup and the first stages of Nate's bouncing ball breakdown? I can't speak a lot. Nate and I trade very differently, so I can't speak necessarily to his theories. I mean, I've definitely watched some of his webinars, and he's great at what he does. He and I just have sometimes very different styles and ways of approaching things, and that's, you know, that's fine. I mean, you ask 100 different traders, you'll get 100 different styles and answers. Here's what I will say is the double bottom, depending on the time frame that you're looking at it in, is one of those trades for me that I'm either right or right out. If you're going to, you know, if you see the possibility of the double bottom, I mean, I had one, I can't even remember what the stock was in chat either today or yesterday. In the last couple of days, I had one that was a possible double bottom. That type of a setup for me is right or right out. Your risk is very clear there at that double bottom area. What's nice to see is the possibility if we get a higher low. That is more confirmation. So, you know, it depends on your, you know, your risk tolerance and your risk level. If you want to be early, you know, and not necessarily have confirmation, you're going to buy that second, you know, low area, knowing though that you have a very tight stop and you're either right or right out. And maybe that's a spot where you scale. Maybe you take an initial position and then you add to it on the confirmation of the setting of a higher low there. So when a stock breaks resistance, do you wait for a second candle to confirm before entry? So it depends. Here's what I do a lot of times in setups that I'm watching. Not always, and every setup will be different depending on what's going on in the market in the setup, but a lot of times what I like, there's three things that I like to do, I guess. I sometimes, let's say the breakout is at $20 and the stock is at, you know, is moving up and it's perking, meaning, you know, it's like getting close to that level and it's moving and I'm watching it and it's at 1990 or 1995, a lot of times I will take some right there. I know that I'm early, and that's just kind of part of my style. I like to feel like I get a little bit of an edge, but I also know that I might be wrong there. So if I choose to anticipate the break, I know that I'm either right or right out, and that if I am wrong, I mean, I keep a very tight stop at that point. My other option, or the other thing that I do, is I will buy the break. If the break is 20, you know, and I see it hit 20, you know, I'm entering my order there at 20, and sometimes, you know, depending on how liquid the stock is, if I just put in a market order, you know, then it's 20 or maybe it's 20.01. I don't spend a lot of time worrying about whether I'm getting it at $19.99 or $20.03. I don't want that to sound like I'm careless in my trading, because I'm not, but because I'm looking for dollar moves, I'm not going to trip over a couple pennies or nickels trying to get those dollar moves. So for me, you know, sometimes, you know, you put the limit order in and you don't get it filled, and I just want in sometimes, as long as it's not something that's thin or very low float. If that's the case, then I'm going to set my limit orders and I'm going to get filled on whatever I can get filled on. Sometimes I'm late. Sometimes I go upstairs to make a sandwich, or I got to go outside and walk the dogs or do chores or something, because I do that during the day. I get up and take breaks. I'm not sitting here always staring nonstop. So sometimes I go, and because I enter my orders manually, I like to be here and actually do the order as it's happening. If I come back and the break was 20 and all of a sudden it's at 20.25, and I'm watching it and I don't think I'm going to get a pullback, I might buy 20.25. It just depends on what the setup is. If that setup and that measuring target on the pattern that I'm looking at projects $5 higher, I don't care about 25 cents. I'm not going to spend time worrying about it. I just know that if I have to pay 25 cents more, I might either take a smaller size or I might need to give it a little wider stop because I didn't get my entry quite as perfect. But I have stopped worrying as much about being absolutely perfect all the time on my entries, because again, in my earlier trading career, I missed a lot by thinking, oh my God, it's at 20.25 and I missed my entry at 20, and then I watch it go to $26. So I'm a little less fussy about my exact pinpoint entry if it's something that I'm very, very interested in. So break at 20, where would I stop out? Depends on the chart pattern. Depends on where support is below that. So it very much, I don't have necessarily the dollar amount, because if it's a specific chart pattern, that support should be very close down below there for me. So, and it depends also on how far up I think it should go. But if I'm going to give it $1 or $1.50 or maybe $2, if you're going to give it a wider stop, I would take a smaller position. And that's been part of with this volatility that I've seen, that I've discussed with some people, privately through chat. They're asking how to manage this. My suggestion is, or an option is, take smaller size, give a little bit wider stops to try and, if it's the setup that you like, to try and avoid some of these intraday wild moves, but you're going to have to take smaller size in order to do that. So that's an option if that fits, the criteria and the trade plan that you're comfortable with. So the break at 20, where would I stop out? It's dependent on the chart pattern, where support is down below, and the sizing of my position. People a lot of times, I'm happy to answer those questions. I think that I don't have a canned answer that I can give you, because part of the criteria in me looking at stops is composed of my personal risk tolerance and the chart pattern setup, and where support is below, or where my trend line is below, that I feel should hold. And some people will have a more canned answer. And canned not meaning bad, just there's other traders that will have very hard and fast rules, but because of the type of trading that I do, because it's composed of the chart patterns, the trend lines and support and resistance, and understanding those, and understanding how that price and that stock should act within that pattern, and where it should support or where it should resist, are incorporated into me figuring out where I want to put my stops at. When I buy a stock, do you follow it up and then turn it into a short? No. No, I don't. I should say, if I think it's a long setup, I doubt that I'm going to turn around and think that it's a short. So I know my guess is some of that question might be coming from some of the style of trading that they might do in the other room. Because a lot of times they're looking for stuff that makes big moves, and then they might be looking to scalp it for 20 cents or 30 cents. If that works for you, that's great. If I'm long something, I understand, and I'm trying to swing it, I understand that nothing goes up straight up except for Costco today. Nothing normally goes straight up. Stuff will move up, and then it's going to do one of two things. It's either going to digest and consolidate sideways, or it's going to have some sort of a pullback, and then it should resume the trend that it's in. I'm not worried about, or I'm worried less about those smaller pullbacks, because typically with the swings I'm trying to get a little bit of a bigger move in there. So I'm not interested in longing it and then trying to flip it short. It's just not part of what I do. I'm not saying that you can't do it, but that in, out, in, out, in, out along the way, I tend to, if I try and do that, what I end up doing is just chopping myself up in the middle and missing the bigger picture there. So now, in saying that, and again, it depends on the chart pattern. If it's something where I've bought a stock and it's moved very well up to a point that should be resistance and I take my profits, for me, just in my personal trading style, I tend to just leave it alone then. I don't think of always flipping it short right away. What I think about is I'm going to take my profits and I'm going to move on and I'll check back with it later. It's just part of my sort of mental process. I don't know why that is the way I think about it. If it moves to a clear area of resistance, I don't know. I guess I just don't look at it that way. Doesn't mean you can't do it. I just tend to take my profits and move on to something else. I don't think of, of flipping it short there. So I just don't. So big move in oil today. Is it going to affect my trading for oil-related stocks in the coming days? Well, I think that, there's several, obviously, of the oil stocks that have had some really nice moves recently. I actually do have a few things that came up tonight when I was scanning, that I kind of have on my sticky note for in the morning to keep an eye on. So because a lot of stuff has moved, then what it makes me think of is look for the stuff that hasn't moved yet to see if it's going to do like a secondary move. So yes, it's going to affect my trading. It's going to continue to watch it. A lot of it's going to depend on what oil prices do. A lot of the oil stuff that's moved is very extended and overbought on multiple time frames. However, that doesn't mean that it can't continue higher, and I understand that. What I would like to see with those is to see them rest and digest. So either pull back some or at least spend several days consolidating sideways so that maybe we can get another entry providing oil continues to act okay. That will be a continuation move higher. That doesn't mean I'm going to get that. If oil comes out tomorrow and wants to go $3 higher, everything's going to keep ripping even though it's already overbought. So I understand that. So my thinking is, try to be flexible. I have a few ideas, and things that that I came up with tonight when I was looking through things that haven't moved as much that I would like to keep an eye on as possible secondary plays. So yes, it does affect, the trading. I don't want to chase things here. But what I'd like to look for is things that maybe haven't moved or haven't moved as far to see if they play catch up. And then it affects, if stuff digests and pulls back, then I'm going to watch to see how all that stuff acts off of the pullbacks, or the resets that they have to see if we can get setups that make sense for more upward momentum, providing oil continues to act okay. New trader with a small account, focus on making trades with high risk rewards. Are pullbacks a good idea for this? I think pullbacks are a great idea. I think that focusing on trades with a high risk reward if you've got a small account is really, really smart. I think being very patient and waiting for those, which isn't always easy, is going to help you grow that account more quickly. And so when you not chasing, in this example, the oil stuff that's moved so well, and really watching and observing for that pullback if we get it. I mean, if we don't get it, we're going to get it at some point, but being very patient for those resets and the pullbacks in the time frame that you're trading are going to help you a lot because you're going to get better entries, You're not going to be chasing. You're going to have entries that you understand that should have good risk reward and that you have a clear understanding of the risk and where that would be. You're welcome. All right, any other questions, you guys? You are welcome. All right. So if we don't have any other questions, typing, no typing. All right. Well, I appreciate everybody being here tonight. I hope that I've answered some of your guys' questions. And, you know, as always, I'm happy, you know, and I know the other mods in the room, you know, are happy. We've got some great resources in there to help you guys out along the way. And lots of good resources out there for you guys to check first as well. So, you know, try and find the answers. If you can't find them, definitely ask. We're happy to help out. And probably Thursday's webinar, I've got a couple of ideas for my topic on that, but I will be talking about shorting in that as well for some of the new folks who maybe are not as familiar with that. So we'll do that Thursday night. And I appreciate your guys' time tonight. I will get this video or this webinar converted and uploaded hopefully tomorrow morning or tomorrow afternoon at the latest. So I appreciate your guys' time tonight, and I will see you tomorrow.